Hey
Hi
everyone, and
everyone,
welcome to our
welcome
deep
to Alpha
dive
Chain
on
Crypto's
crypto
first
in
podcast,
2025.
Crypto Cubes.
We've got a
In
whole
this
bunch
episode,
of
we will
reports
cover
and articles
Messari's
you chose,
2025 Theses
and I think
report.
we're in
We hope you
for
enjoy the
quite a
show.
ride.
It's amazing how much the crypto landscape has already changed in just the last year.
Right, like remember how everyone was saying institutional investors were just kind of testing the waters? Well, now we've got BlackRock's Bitcoin and Ethereum ETF, IBIT, sitting on a whopping $40 billion.
It really shows how crypto is becoming more mainstream, and that flood of institutional money, well, it's likely to stabilize the market. Maybe those crazy price swings we used to see won't be so dramatic anymore.
And it's not just BlackRock diving in head first, right? We've got a ton of other big players jumping in. Plus, we've got Solana absolutely crushing it, even beating out Ethereum for daily on-chain app fees sometimes.
I think Solana's popularity really highlights the demand for crypto that's easy and fun to use. Super fast transactions, low fees. DeFi is booming on there. It's attracting both developers and everyday users who might have found Ethereum, I don't know, a bit too much to handle.
And speaking of attracting new users, let's talk about meme coins. You might think they're just a joke, but they're consistently accounting for 6 or 7% of the total crypto trading volume.
Yeah.
And sometimes it even jumps up to like 11%.
It's easy to write them off as hype, but you can't ignore those numbers.
Yeah.
The simplicity of meme coins, combined with platforms like Pump.Fun and Moonshot, are really opening up crypto to a whole new generation. But of course, got to remember, they're speculative assets, so you always want to be cautious.
Absolutely. Meme coins can be fun, but yeah, risky. Okay, so let's move on to something a little more, I guess you could say, grounded to pin or decentralized physical infrastructure networks.
Right.
Our sources are showing some really incredible real-world DeFi solutions popping up everywhere.
Yeah, DeFi is really exciting because it's moved past just the theoretical stage and into actually making a difference. We're seeing projects like Helium Mobile. They have over 120,000 subscribers for their DeFi-powered mobile service. And then there's Glow. They're deploying solar farms all over the globe. And GeoNet is building the world's largest RTK network, that high-precision GPS alternative, with over 11,000 nodes already up.
It's incredible how this tech is being used to solve real-world problems.
Absolutely.
Okay, so the goal of this deep dive is to give you all the insights you need to navigate this wild world of crypto, the good, the bad, and the truly mind-blowing. Buckle up, because we're going to break down everything. First up, let's look at those institutional investments and what they actually mean for the market.
Okay, so let's start with those Bitcoin and Ethereum ETFs.
Yeah.
They're a big deal because they basically give crypto a stamp of approval from Wall Street, and that opens the door for a ton of institutional money.
Yeah, it's like crypto finally earned that Wall Street seal of approval. But what does this mean for everyday people?
Well, for one thing, it's likely to lead to a more stable market. Remember all those wild price swings we used to see? This influx of institutional money could really help to smooth those out.
Yeah, that makes sense. More stability will probably bring even more people into crypto. And it's not just about ETFs either, right? Our sources show traditional finance firms are getting into things like tokenized treasuries. Those are basically just like digital versions of government bonds.
Absolutely. More and more companies are getting into tokenized treasuries, like Franklin Templeton and Ondo Finance, and they're attracting hundreds of millions in assets. The cool thing about these funds is they offer real-time settlement, better liquidity, and even fractional ownership, all thanks to blockchain.
Fractional ownership is huge because it means more people can get a piece of the pie no matter how much money they have. That's pretty exciting. Okay, so how about we shift gears and talk about Solana and its incredible rise in popularity? What's causing all the buzz?
What really boils down to ease of use. Solana provides a really user-friendly and scalable alternative to Ethereum. Faster transactions, lower fees. DeFi is growing like crazy over there. It's attracting developers who are building really innovative apps and users who just want a smooth and simple experience.
Yeah, Solana's like the trendy new kid on the block, attracting a younger, tech-savvy crowd who want like a faster and more efficient crypto experience. But we can't ignore the fact that a lot of Solana's growth is tied to meme coins.
Yeah,
Should we be concerned about that?
it's definitely something to keep in mind. While meme coins have brought in a ton of new users to Solana, they do come with risks. Just like we discussed before, approach them with caution. However, the fact that Solana can handle all of those meme coin traders without, breaking down really does speak to its technical capabilities.
Yeah, that's a really good point. Okay, so let's dive into the world of DePIN. Earlier, you mentioned some really impressive examples like Helium Mobile and Glow. What are some of the key takeaways from our sources about DePIN's growth this year?
The biggest takeaway is that DePIN is actually delivering real-world value. We're seeing companies build decentralized infrastructure for essential services like energy, wireless communication, data storage. It's all about creating solutions that are efficient, transparent, and accessible.
That's awesome.
And it's not just about the tech itself, it's about actually making a difference. Like, take Helium Mobile, for example.
Yeah.
They're offering mobile plans that are super affordable because their network is powered by DEPIN. So imagine like mobile service where you're actually a part of the network and you can actually benefit from it. That's pretty powerful stuff.
It really is like cutting out the middleman and giving power back to the people.
Okay, so let's switch gears a bit. Our sources highlight Bitcoin's impressive performance in 2024. It feels like it's getting back to its roots.
It really does. After all the excitement around DeFi and NFTs, Bitcoin seems to have really doubled down on being like a store of value and a hedge against inflation. And it looks like that strategy really paid off. Bitcoin broke through that $100,000 mark earlier this year. Remember that? Our sources suggest that those Bitcoin ETFs we talked about played a pretty big role in that surge. They opened the door for a flood of institutional investors.
Yeah, the floodgates definitely opened, but it wasn't just ETFs. The Bitcoin ecosystem itself has seen some pretty exciting developments, like new token standards and increased programmability, even restaking.
So it's not just about holding on to Bitcoin anymore. It's about using it in new and innovative ways. Now, Ethereum has always been seen as the platform for innovation, but our sources suggest that it faced some challenges this year. What happened?
Yeah, Ethereum, while it's still the main platform for those decentralized applications, it didn't quite see the explosive growth that a lot of people were predicting, and its token ETH kind of lagged behind Bitcoin and Solana in terms of performance.
That's surprising. What do you think contributed to that slowdown?
Well, part of it was the rise of those high-performance Layer 1 blockchains like Solana and Sui and Aptos. These platforms offered faster transactions, lower fees, and a more developer-friendly experience, which really pulled attention and investment away from Ethereum.
Yeah, the competition is definitely getting fierce. But weren't there also some internal challenges within the Ethereum ecosystem too? Something about Layer 2 scaling solutions?
You're right, there's been a lot of debate about Layer 2 scaling and how value is captured. You see, Ethereum has been focusing on scaling through these Layer 2 solutions, which are basically separate blockchains that sit on top of the main Ethereum chain, and they handle more transactions.
Okay, that sounds like a good thing. What's the issue?
The debate is about how much value those Layer 2s actually bring to Ethereum itself. Some people argue that they're actually taking value away from Ethereum instead of adding to it.
So it's like a tug of war between the main chain and these Layer 2 solutions over who actually benefits from the growth.
Exactly.
Yeah.
It's a complex issue, and the Ethereum community is definitely working hard to figure it out. But while we're talking about competition, those other Layer 1 blockchains, Sui and Aptos really made a splash this year. What do you think makes them stand out?
From what I've read, Sui and Aptos are built using the Move programming language that was originally developed by Facebook for their Libra project. It's specifically designed for building secure and scalable blockchain applications.
Right, and they're really using that to their advantage. They're creating platforms that are faster, more efficient, and potentially more secure than Ethereum. Plus, they've secured some serious funding from top venture capital firms.
It's like David versus Goliath. Can these Move-based blockchains actually take on Ethereum with its massive developer community and that well-established ecosystem?
It's way too early to say for sure, but it's definitely going to be a thrilling race to watch. Now, shifting gears a little bit, our sources have been highlighting this growing importance of interoperability in the crypto space. Can you explain what that is and why it matters?
Yeah, so think of it like building bridges between different countries. Interoperability is all about connecting those different blockchains so that they can talk to each other and share data seamlessly. It's about creating a crypto ecosystem that is more unified and more efficient.
Exactly. As the number of blockchains keeps growing, we're seeing this kind of fragmentation happening. Different blockchains have different strengths, and they operate in their own little silos. Interoperability breaks down those walls, and it lets users move their assets and their data between chains super easily.
Yeah, so it's all about creating a more user-friendly and interconnected experience. What are some of the key technologies driving this interoperability push?
We're seeing some really cool developments like cross-chain bridges that let you transfer your tokens and your data between blockchains, and then there are inter-blockchain communication protocols, or IBC for those in the know, for direct communication between blockchains. And projects like Cosmos and Polkadot are even building entire ecosystems of interconnected blockchains.
It's like the Internet of Blockchains is being built right in front of us. But with all this interconnectedness, are there any concerns about security or complexity?
Yeah, definitely. Those are valid concerns. Connecting blockchains can potentially increase the attack surface for hackers. So building these interoperability solutions securely and reliably, that's a complex challenge, and it really requires a lot of expertise and collaboration.
Yeah, that's definitely a challenge that needs to be addressed if we want this truly interconnected crypto ecosystem. Now let's talk about decentralized storage, another crucial aspect of crypto infrastructure that's gaining traction.
So think of decentralized storage, like having backups of your important files on multiple hard drives instead of just relying on one. It's about storing data on a network of computers rather than these centralized servers. So it ends up being more secure, more resilient, and resistant to things like censorship.
Okay, so why is it becoming so important in the crypto world specifically?
Well, for one thing, it really aligns with those core values of decentralization and censorship resistance by distributing data across a network. It makes it much harder for anyone to control or censor information.
Hmm.
And on top of that, it can actually be a lot more cost-effective than traditional cloud storage.
And with the amount of data we generate, constantly increasing decentralized storage is becoming essential. What projects are really leading the way in this space?
Platforms like Filecoin, Arweave, and Sia are making some big waves. They're letting users rent out their unused hard drive space to store data, and then they can earn rewards. And they're also using cutting-edge tech like zero-knowledge proofs to boost privacy and security.
The possibilities are pretty much endless. Okay, let's move on to another really exciting area, the convergence of artificial intelligence and crypto. Our sources are pointing to some fascinating developments like decentralized AI platforms and AI-powered trading tools.
Yeah, this intersection of AI and crypto is like a whole new frontier in technology.
Huh.
AI has the potential to revolutionize every single industry, and crypto provides the perfect platform for building AI solutions that are decentralized, transparent, and accessible.
It's like they were made for each other. Can you give us some specific examples of how this is playing out?
One area that's really exciting is decentralized AI model training platforms like Bitansar are creating networks where people can actually contribute their own computing power to train AI models, and then they earn rewards. It's like a community-driven approach to AI development powered by the blockchain.
That's incredible. It's like democratizing AI development. What other AI and crypto applications are out there?
We're also seeing the rise of AI-powered trading bots that can analyze market data, spot trends, and execute trades automatically. These bots can help both individual investors and institutions improve their strategies and potentially get better returns.
It's like the rise of the machines, but in the crypto world. Are there any risks to consider with this level of AI integration?
Definitely. Like any powerful technology, AI can be misused. It's really important to develop ethical frameworks and safeguards to ensure responsible AI use in the crypto space. We have to be cautious of AI being used for bad things like market manipulation or creating sophisticated scams.
Yeah, it's a balancing act for sure.
Yeah.
Okay, now let's talk about centralized exchanges, or CEXs. They faced a lot of scrutiny and a loss of trust following the FTX collapse, but our sources suggest that they're adapting.
Yeah, CEXs have been working really hard to rebuild trust by increasing their transparency, strengthening their security, and working more closely with regulators.
So it's like a back-to-basics approach. What are some of the trends you're seeing in the CEX space as we head into 2025?
One trend is this rise in institutional-grade products and services. CEXs are trying to meet the growing demand from those institutional investors by offering things like custody solutions, prime brokerage services, and even spot Bitcoin ETFs.
It's like the more mature version of crypto is emerging with offerings tailored for more sophisticated investors. What else are you seeing?
CEXs are also expanding into new areas like DeFi and NFTs. They're launching their own DeFi platforms, NFT marketplaces, even metaverse experiences. They're really aiming to be like that one-stop shop for all things crypto.
That's a huge expansion. Are there any concerns about having too much centralization in a space that's supposed to be all about decentralization?
Yeah, that's a very valid concern. As CEXs gain more power and influence, it's important to remember the core value of decentralization. Users should always have the option to choose those decentralized alternatives, and developers need to keep innovating in the DeFi space.
So ideally, we'd have a balance between CeFi and DeFi, with each sector complementing the other. Okay, now let's talk about the stablecoin market, which has seen incredible growth this year, according to our sources.
Yeah, stablecoins have really become a vital part of the crypto ecosystem. They act as a bridge between the volatile world of crypto and the stability of those fiat currencies like the US dollar. They're being used for everything from trading and remittances to everyday payments and savings.
Yeah, and their popularity has just exploded in 2024, with monthly transfer volumes surpassing $3.5 trillion. That's on par with Visa's quarterly volume. What's driving all this adoption?
It's not just people looking for a safe haven from that crypto volatility. Stablecoins offer real advantages over traditional finance, especially for people in emerging markets. They're faster, cheaper, and way more accessible than traditional banking.
So they're actually revolutionizing financial systems in parts of the world where traditional banking is limited. What trends are you seeing in the stablecoin market as we head into 2025?
We're seeing these new stablecoin protocols popping up offering innovative features and higher yields. For example, Athena's USD has become the fastest stablecoin to reach $3 billion in supply. And that's thanks to its unique cash and carry trade model, which generates pretty attractive returns for users.
The innovation in the stablecoin market is definitely heating up. But are there any concerns about stability and regulation?
Those are definitely important considerations. Stablecoin stability is crucial for maintaining trust in the entire crypto ecosystem. Regulators are keeping a close eye on those stablecoin issuers, and they're working to establish frameworks to ensure their safety and soundness.
So innovation needs to happen responsibly within a clear regulatory framework. Okay, now our sources also highlighted some pretty significant developments in the regulatory and political landscapes surrounding crypto. What were some of your key takeaways?
Well, one of the most impactful events this year was the U.S. presidential election. The outcome had a huge impact on the crypto industry, especially when it comes to regulatory expectations.
You're talking about the Trump victory, right? Our sources show the crypto industry overwhelmingly supported Trump's candidacy. Why was that?
Trump really positioned himself as a pro-crypto candidate. He promised to reverse what he called the unlawful and un-American crypto crackdown of the previous administration. He pledged a more favorable regulatory environment, a Bitcoin and Crypto Advisory Council, and he even explored holding Bitcoin as a reserve asset.
Wow, those are some pretty bold promises. No wonder the crypto industry was excited. But has his victory actually lived up to the hype? Have we seen a real shift in the regulatory landscape?
It's still early days, but the regulatory tone has definitely shifted towards the positive. The SEC, which was pretty aggressive under the previous administration, has taken a more cautious approach, and there's been talk of new legislation that could provide some much-needed clarity.
So it sounds like the crypto world is breathing a sigh of relief. Less regulatory uncertainty and more room for innovation.
That's the general feeling. But not everyone is convinced that Trump will actually keep his promises. Some skeptics think his whole pro-crypto stance was just a campaign tactic.
It's a wait-and-see situation. Time will tell if his presidency really does usher in a golden age for crypto. Our sources also mentioned some interesting developments in Congress, particularly in the House of Representatives.
Yeah, the House is now under Republican leadership, and they passed several pro-crypto bills in 2024. One notable example was the Clarity for Payment Stablecoins Act.
What was the main goal of that bill?
It was all about creating a clear regulatory framework for stablecoins, which are becoming more and more important in the crypto space. The goal was to give those stablecoin issuers a clear path to regulatory approval while ensuring the stability and safety of these assets.
So bringing some order to the stablecoin market and making sure that they operate within clear rules.
Exactly.
Yeah.
The bill also tried to promote innovation in the stablecoin space, recognizing their potential to transform financial systems. However, it did face some resistance in the Senate, which is still controlled by Democrats. Their focus remained on combating illicit finance, which the industry worried would stifle innovation.
So it's a political tug-of-war. The House wants to foster innovation while the Senate is prioritizing security and regulation. It seems like finding a balance between those two will be crucial for the future of crypto regulation in the U.S. Now, shifting gears a bit, our sources also highlighted some pretty interesting philosophical debates happening within the crypto community. One that caught my eye was the discussion about decentralization. Is it really as important as everyone says, and is it even achievable in practice?
Well, decentralization is this core principle of crypto. It's the idea that power should be distributed rather than concentrated. But as crypto matures, there's this ongoing debate about whether true decentralization is actually possible or even desirable.
So the crypto community is questioning its own core beliefs. Why is that?
Well, partly because we're seeing these powerful centralized entities emerge within the crypto space, like these large exchanges and mining pools. And some people argue that they undermine that whole decentralized nature of crypto.
It's like the irony of decentralization is that it can actually lead to these new centers of power.
Exactly. And then some argue that decentralization can actually hinder efficiency and scalability. Centralized systems can often be faster and more efficient at making decisions, and as crypto grows, we need solutions that can actually handle those huge transaction volumes.
Yeah, so it's a trade-off between decentralization and efficiency. Is there any way to have both?
That's the million-dollar question that a lot of developers are trying to answer. They're working on solutions that can somehow combine the benefits of both worlds, things like sharding, layer 2 scaling solutions, and new consensus mechanisms.
It's awesome that the crypto community is always pushing the boundaries and looking for ways to improve. Now let's talk about crypto's impact on the real world. Our sources highlighted some examples of how crypto is actually being used to address social and environmental challenges.
Yeah, crypto has the potential to be a really powerful force for good. One area is financial inclusion. Crypto can provide financial services to people who are unbanked or underbanked, especially in developing countries.
So it's a way to empower individuals and communities that have been excluded from those traditional financial systems. Right?
Exactly. Crypto can also promote transparency and accountability in things like charitable giving. Blockchain-based platforms allow donors to track their donations and actually see how their money is being used, making sure that those funds are reaching the intended recipients.
That's fantastic for building trust. What other examples are out there?
Well, crypto is also being used to tackle environmental challenges. Some projects are using blockchain tech to track carbon emissions and actually incentivize more sustainable practices. And as we talked about earlier, Daybin is creating decentralized energy grids that can help us move away from those harmful fossil fuels.
It's amazing to see how crypto is being used to solve real-world problems. But let's not forget about the challenges. Our sources also highlight some key risks and concerns that investors and regulators have.
Right, one major concern is market manipulation and fraud. Crypto is still relatively young and unregulated, which makes it vulnerable to bad actors. We've seen pump-and-dump schemes, hacks, and scams that have cost investors millions of dollars.
Yeah, it can still feel like the Wild West sometimes. What can be done to protect investors?
I think increased regulation is definitely needed. Regulators are working on creating clearer frameworks for crypto to try and deter bad actors and level the playing field. Education is also key. Investors need to understand the risks and take steps to protect themselves, like doing their research and only investing what they can afford to lose.
It's a shared responsibility. Regulators need to create a safe environment, and investors need to be informed and cautious. What about volatility and those security vulnerabilities? Those are risks that are always going to be associated with crypto.
Yeah. Volatility is just inherent in the crypto market. Cryptocurrencies are still new and speculative, and their prices fluctuate, which creates both opportunities and risks. It's really important to have a long-term view and be prepared for those ups and downs.
So it's not for the faint of heart. What about security vulnerabilities? Hacks and stolen crypto are still a big concern.
Absolutely. Security is paramount in the crypto world. We've seen exchanges, DeFi platforms, and individual wallets hacked. Strong passwords, two-factor authentication, and secure wallets are crucial. And as technology evolves, we're seeing more sophisticated security solutions like those multi-signature and hardware wallets.
It's an ongoing battle, constantly trying to stay one step ahead of the hackers. So let's shift our focus to the positive trends shaping the future of crypto. What are you most excited about?
Well, I'm really fascinated by the growing integration of crypto into everyday life. We're seeing crypto used for online payments, remittances, loyalty programs, gaming rewards. As crypto becomes more user-friendly, it's just seamlessly weaving itself into our digital lives.
So crypto is becoming less niche and more mainstream.
Exactly. And I think that trend is only going to accelerate as more and more people embrace crypto. Another trend that I'm excited about is the rise of decentralized autonomous organizations, or DAOs.
DAOs. Tell us more about those.
So basically, they're organizations that are run by code, not by people. They're governed by these smart contracts on the blockchain, so their rules and operations are completely transparent and immutable. DAOs could revolutionize how we organize and govern things, creating structures that are more democratic and efficient.
So taking power away from those centralized institutions and giving it back to the people, all powered by the blockchain, that's a pretty radical idea.
It is. And we're really just starting to see what DAOs are capable of. They're managing investment funds, coordinating community projects, and even creating new forms of digital art and collectibles.
Wow, the possibilities really do seem endless. Okay, now what about the future of crypto trading? Our sources indicate that both centralized and decentralized exchanges are evolving pretty quickly.
Yeah, both CEXs and DEXs are becoming more sophisticated. They're offering a wider range of trading products and services, including things like margin trading derivatives, lending, and borrowing. They're constantly innovating to improve the trading experience.
It sounds like it's a race to the top, but Are the lines between CEXs and DXs blurring, or are those core differences still distinct?
I think they're becoming more similar in some ways, like they both offer a wider range of products, and they're both really focused on user experience. But their fundamental differences remain. CEXs are centralized, they're controlled by a single entity, while DXs are decentralized. They're run by code on the blockchain.
So it still comes down to choosing between centralization and decentralization. What factors should traders consider when deciding between a CEX and a DX?
Well, security is a big one. CEXs usually have more resources dedicated to security, but DEXs offer more privacy and control over your funds because you don't have to trust a third party. Trading fees are another thing to consider. DXs usually have lower fees. And finally, traders should look at the range of products offered. CXs typically have more options, but DXs are catching up.
So the choice really depends on individual needs and preferences. Okay, before we wrap things up, what are your overall thoughts on the state of crypto in 2025?
Crypto is incredibly dynamic and it's constantly evolving. We've seen tremendous progress from mainstream stablecoin adoption to the rise of DePIN and AI integration. But of course, there's still challenges like regulatory uncertainty, security risks, and the need for greater scalability.
So it's a mix of excitement and innovation alongside some challenges and risks. That pretty much sums it up right.
Yeah, it really does. But that's what keeps things interesting. There's always something new happening, some new problem to solve. Our sources also dig into some of the ethical and philosophical questions that are facing the crypto community. And one that stood out was the whole debate about the environmental impact of crypto, especially those proof-of-work blockchains like Bitcoin.
Yeah, the energy consumption of Bitcoin mining has been a hot topic for years, and our sources say that the debate got even more intense this year with energy prices skyrocketing globally. What are the main arguments on both sides of the issue?
Well, on one side, you have people who believe that Bitcoin's energy consumption is just way too high and unsustainable. They point out that Bitcoin mining uses as much electricity as some entire countries, and they're worried about the environmental impact of all that energy use. They think we should shift to more energy-efficient methods like proof of stake.
Okay, and what about the other side?
Bitcoin supporters argue that the energy used for mining often comes from renewable sources like hydroelectric and solar power. They say that Bitcoin mining can actually encourage the development of renewable energy infrastructure. And they also point out that traditional financial systems, with all their data centers and offices, also use a ton of energy.
So it's a complicated issue with valid points on both sides. It seems like the debate about Bitcoin's energy consumption is going to keep going as the industry tries to figure out its environmental impact. Okay, let's move on to another trend that's been gaining a lot of attention. Decentralized science, or DeSci. Our sources suggest that DeSci is becoming a major force for innovation in scientific research. Can you tell us what DeSci is and why it's causing so much excitement?
So DeSci is basically about applying the principles of decentralization to scientific research. It uses blockchain technology, smart contracts, and DAOs to create scientific communities that are more open, transparent, and collaborative. You can think of it as a way to remove those gatekeepers in traditional science and empower researchers to collaborate and share knowledge more freely.
It sounds like DeSci could really shake things up in the world of science. Can you give us some specific examples of how it's being used?
One area where DeSci is making a big impact is funding scientific research. Traditionally, scientists had to rely on grants from government agencies or private foundations, which can be really slow and competitive. But now DeSci platforms like VitaDAO and Molecule are using DAOs to fund research projects directly. Anyone can contribute and have a say in what gets funded.
That's a really democratic approach to funding science. What other applications of DeSci are you seeing?
DeSci is also being used to make it easier for scientists to share data and work together. Platforms like Ocean Protocol and IPFS are creating decentralized data marketplaces where scientists can share their data securely and transparently. This can help speed up scientific discoveries by making it easier for researchers to build on each other's work.
It's amazing how DeSci is removing those barriers to scientific progress.
Okay, so before we wrap up this deep dive, I wanted to talk about one more trend that's been on my mind: the growing integration of crypto into our physical lives.
Yeah.
Our sources highlight all these real-world applications of crypto that are popping up. It's not just about online transactions anymore. Are you seeing this in your own life?
Oh, absolutely. Crypto is definitely not just a digital thing anymore. We're seeing it used for everything from buying a cup of coffee to purchasing real estate and even getting paid for work. It's becoming more and more integrated into our everyday lives.
It sounds like crypto is finally bridging the gap between the digital and physical world. Can you give us some specific examples of those real-world crypto applications that you're seeing?
Well, one example is the rise of crypto ATMs and point-of-sale systems. This allows businesses to accept crypto payments directly, making it super easy for people to use crypto for their everyday purchases. And then there are crypto debit cards that let you spend your crypto anywhere that accepts regular debit cards. So it's becoming more and more convenient to actually use crypto in the real world. What other applications are you excited about?
I'm really interested in how crypto is being used to create new models of ownership and access. For example, some companies are using NFTs to represent ownership of physical assets like real estate or artwork. This can simplify transactions, reduce fraud, and make it easier for people to invest in alternative assets.
Wow. It sounds like crypto is opening up all these new possibilities for how we interact with the world around us.
Well, I think we've covered a lot of ground in this deep dive, from institutional adoption and that layer one competition to the philosophical debates about decentralization and the rise of DeSci and real-world crypto applications. It's clear that the world of crypto is constantly changing.
It definitely is, and that's what makes it so exciting. There's always something new, to learn a new problem, to solve a new possibility to explore. I couldn't agree more. And to all of you listening, we hope this deep dive has given you a glimpse into the world of crypto in 2025. Remember, this is just the beginning. The future of crypto is being shaped right now, and you can be a part of it. Keep exploring, keep learning, and keep pushing those boundaries of what's possible in this incredible digital world.
Until next time.